Hi guys, morning. So today we're here to discuss the UK manufacturing PMI, and me and Max has gone somewhere, but we're definitely here to cover the data for you. Um, all right. As you can see on my screen at the current moment, the forecast for the manufacturing PMI in Great Britain stands at 52.3 points, while the prior figure was at 52.9. And to talk a little bit more about the history of the indicator, of the specific one, I would like to remind you that the conditions in the UK manufacturing sector improved more than expected in January, boosted by a sharp increase in output at large manufacturers, although exports declined still. However, this all suggested that analysts are underestimating the economy's strength because the monthly market manufacturing purchasing managers index climbed to a 3-month high of 52.9 in January from 52.1 in December, exceeding forecasts for a 51.6 reading as factories increased output at their fastest pace since June 2014. The manufacturing sector failed to contribute to the UK's economic growth throughout the prior year, and analysts warned the feel-good factor generated by the January's figure likely to be short-lived, as the sector is expected to face headwinds in the short-term future. That's why at the current moment the data is expected to show the pace of expansion in the manufacturing sector slowing further in February, and the headline figure is seeing, as I said already, points, which is slightly lower than January reading. Let's move on to the experts and their estimates on the matter. So we have here different experts from different banks and financial institutions, and of course, according to their views, we have the Bloomberg survey summary where the median estimate stands at 52.3. Average 52.23, highest estimate is 53.5, and the lowest estimate is 51.0, while the total number of estimates has reached 26 this time. Of course, we have a couple of quotes from them. For example, Scott Bowman, a UK economist of Capital Economics, says that given the high level of sterling relative to its recent past and the continued weakness in overseas demand, any near-term improvement in the manufacturing sector is likely to be very moderate. That's what he thinks. And also, here I have the research team at Danske Bank suggesting that today is the big manufacturing PMI day in Europe, and also the key highlight would be the UK PMI. And they say that we expect the UK manufacturing PMI to show a small decline, suggesting that the economy might slow down somewhat in the coming quarter. We do, however, expect levels to remain relatively high, and we see it's well above the 50 points, thus pointing to the positive growth. That was it from the experts. Let's move on to the Dukascopy community members and their sentiments on the pound sterling versus the currency pair. And we see here that traders are bearish at the matter with 64.58% bearish votes versus the 35.42 votes. And we have a couple of comments here, and Sharpsand, for example, says that the pound is in a big trouble. Furthermore, we'll have all the uncertainty about probably with Brexit, whatever. The manufacturing sector is quite strong since 2013, and it is always over 50, which means expansion. That was what Sharpsand thinks on the matter, and right now it's already time for me to pass the floor to Max, who is going to cover technicals for you. Please.
Thank you very much, Kate. Hello, good morning, good afternoon, good evening, everybody. I hope you have a great Tuesday so far. So actually speaking about the technicals today, even though we have a pretty much gloomy forecast for the UK manufacturing PMI, it is expected to decline slightly in February. The majority of traders seem to be believing that the pound will still benefit from the data and will move to the upside. Because overwhelmingly the sentiment right now is very positive on the pound sterling currency pair, and also the technical indicators are pointing to the upside. Therefore, we cannot go against our traders' sentiment. Therefore, we have chosen to go a positive surprise trading strategy today, because it is also likely that the data will be released, let's say, better than it is currently expected. So concerning the sentiment itself, as you may see, more than 63% of all open positions are now long on the UK currency against the greenback, and also depending orders are going long in more than 50% of all the cases right now, and the general sentiment is also being reinforced by other market participants who are also right now betting on the rally of this particular currency pair. So moving on to the current market situation, as you may see, the pair is at the moment trading right at the 200-minute simple moving average line at 1.3949, and of course this is a 1-minute chart for this particular currency pair. And as usually, to project the possible market reactions after the data is published, let's have a look at the previous reactions for the same data released in the last 5 months. And the average reaction for this data release was 24 pips, although it includes the 47 pip very strong reaction from November, when the data was published much better than expected. While excluding that number, the average reaction is closer to 20 pips. So taking that number as a benchmark, we can possibly project that in case the data is published really better than expected, against the expectations, then we can see the sterling moving up from the current level of 139.44, potentially into the area of 1.3960, because considering the most recent decline in the value of the pound in the last couple of minutes, the first initial take profit of 139.80 is quite out of reach for the moment, only in case the data is published really better than expected. But we have a 40 pip gap between the current spot and the daily R1 resistance, which is the first take profit as well. Possibly we have already some pre-reaction to the data, or the traders are also selling the sterling in order to buy it immediately when the data is out in 50 seconds from now. So at the same time, the stop loss initially it was located just some 6-7 pips below the current spot price, which is the 4-hour pivot point at 1.3938. So since I have just half a minute to go, let's have a look at the technical indicators. I have already mentioned them, and they are actually also pointing to the upside right now, so they support the positive case for the pound for the next hour of trading, even though they tend to go short on this currency in the long term from 4 hours until 1 month. So we have just a couple of seconds to go till the data will be released, and we hopefully will see the numbers for the PMI. So the initial reaction is quite negative, as you can see, because we indeed have a disappointment against the sentiment of the traders, against the technical indicators. As you can see, the actual UK manufacturing PMI dropped to 50.8 points in February, which is much lower than it was expected, of 52.3, and it is also down from 52.9 back in January. So even though any reading above 50 still suggests, still implies that the sector's activity is growing, it is definitely, we can claim that the activity growth is slowing down, and it's not already far away from a contraction territory. Yes, indeed, it's really on the edge. So it will be quite interesting to see the next month development, whether we see a decline below 50 points, because there are some downside risks on this, on the manufacturing industry, and one of the recent ones where the sterling strength, even though it has dropped quite significantly, as you can see, not only today, but just already in the last couple of weeks. And of course, that Brexit referendum, which will take place on June the 23rd, it is also putting pressure on the manufacturers, which can decrease investment in the foreseeable future, and will put pressure on the PMI reading, of course. So measuring the initial reaction, as you can see in the first minute, the pair dropped by 26 points, while the 2-minute cumulative decline reached 36 pips to the downside. Okay, I guess that will be all from my side right now on the technical part today. Thank you very much for listening. I wish you all a great day ahead. See you all tomorrow, and back to you, Kate. Thank you.
Well, yes, despite everything was pretty much green on the pound, Dukascopy community members were correct on this one. So yes, you can still see the numbers in the chat, you saw the reaction, and thank you because you did participate in our discussion. Thanks again, thank you very much. We're not having any data releases today anymore, but we are definitely going to have a number of webinars because our community members are getting ready or are already ready. So make sure you're staying here, make sure you tune in for the interesting discussion, follow the schedule, and meanwhile we're saying bye to you and see you tomorrow. Bye.